So let's do it, guys. You ready? You guys good?
Yeah.
Good. All right, everybody, welcome back. We've got a very special video for you today. So we've got James and we've got Tom. Tom is also known as the Kaizen Trader on social media and on his blog. I wanted to bring Tom on today because James and I have been working with him in the Black Shirt Club, which is our small group mentorship program. And we've really seen a lot of growth in Tom's career as a trader. And I think a part of that growth is not just due to the community and the mentorship that we offer in the Black Shirt Club, but also due to Tom's own work ethic and Tom's discipline in his analysis of his own trading. So we're actually going to share my screen here in a second and go over some of Tom's statistics, some of the lessons that you've learned on this journey so far, Tom. And I'd really even like to hear about where you're at right now with getting funded, because I know a lot of people watching this are in the process or they're thinking about getting funded. So they, I'm sure, would like to hear your experience there. But this is your first time on the YouTube channel, bro. So welcome, James. We got to give him a round of applause. It's his first video here. So we appreciate you giving us the time, Tom. Do you want to first kind of kick us off and catch everybody up on where you're at in your trading journey in the process of getting funded and all that?
Yeah, no worries. Thank you. So I joined ASFX at the start of 2020, around about May, just as we moved into the pandemic and the whirlwind of the last 18 months. And for the first sort of 12 to 15 months, I just spent the time studying both of the ASFX A1 and D1 courses. Did a lot of sort of back testing just to make sure I was understanding the systems, gather the statistics for myself. I did around about 3 to 4 months of demo trading. And then in around July this year, 2021, I have started trading a live account. Firstly, my own capital to a small account, and then sort of just growing that steadily every month. And then I have just started my funding challenge, and about 3 weeks into that now.
Perfect. I love it. James, your experience, I know a lot of people probably already know this, but you have experience with 2 separate funding companies. In your experience, has it ever been this popular to get funded and to try to get capital from one of these companies? I don't think it's ever been this popular, right?
Yeah, no, well, definitely. It wasn't like this when I first got into trading with you guys at ASFX, but I think slowly but surely people are starting to open up to the ideas and possibilities that the extra capital brings, right?
Yeah. And I think where we kind of want to tie this all together with showing Tom's statistics here today, of course, we're going to break down the lessons here, but I think it's important that in the process of trying to get funded, that people don't go at it without a system, without a rules-based approach to their trading, which is exactly what Tom has, which is why he has such detailed statistics like we're going to go over today. You couldn't have these statistics, or at least any organization behind these statistics, if you didn't have a trading system. Wouldn't you guys agree?
Yeah, 100%.
Right. So I think that's the first thing. You always need the system. And I was saying this to you guys, I think in our Black Shirt Club meeting last week, that line between trading professionally and gambling, it's very thin, and people don't realize it, because people get into trading and they think it's just clicking buttons, clicking buy or sell, hoping for the best. But that is way more in the gambling boat than what we do at ASFX, which is a very systemized approach. With that systemized approach, you can be detailed, like I said, in your analytics, and that can help us improve. So we're going to talk about these statistics now. Tom, I know that you and I have had our coaching sessions and we've talked about what can be done to improve this, but for the people that don't really understand what they're looking at here, can you kind of just break it down for us, what we're looking at, maybe just in the top section of this so far?
Yeah, sure, no problem. So this is my all-time trades that I've taken since I have been live for the last sort of 4 months. And over at ASFX, you'll know that we grade our trades A through to D. And what I've done here is I've just gathered some stats so I can see how much of an impact the lower grades, which with ASFX are classed as lower probability trades, actually have an impact on our sort of profit and loss over, well, this is over all time, but I'll journal it over sort of a week, a month, quarter, and this allows me to see which grade is performing best.
Now, was this for both of you? I'm curious. Before ASFX, grading your trades was not something you did, I'm sure, right?
Not for me, at least. No. definitely
What about
not.
you, Tom?
So ASFX is the first financial sort of trading course I have ever been on. So I
So
know
you didn't
no
even really
different,
have a lot of
unfortunately.
experience before.
No.
Got it. Okay. So grading, I think, is something that is a little bit more unique to the way that we trade. But in a market like Forex that is so technical and so systematic, the grading actually makes a big difference, because then you're not putting the same risk on all these trades. Of course, your A setups are going to get more risk than your D setups. The D setups, I think, should be completely avoided. Tom takes this a step further and grades them D. I only go A to C. Tom is, of course, you're going to see everybody very detailed. What we can do with this, though, why we do this data, why it's important that Tom keeps this data, is because we can break down where his strengths are, where his weaknesses are, and we can cut the weaknesses out and really focus in on the strengths. So, for example, just looking at the top of this, you can see he had a 12.43% gain on his B setups and a 4% gain on his A setups. But his losses, 1% and 8%, would come from his C and D setups. So just taking out the C and D setups would dramatically change the performance of Tom's trading over the last, how many months is this, Tom?
This is over 5 months now.
Yeah. So just taking out those lower probability setups would make a big difference in his trading. Is there anything here, James, that stands out to you on the top of the statistics before we move to the bottom part here? Anything else that's interesting?
Yeah, I would honestly just say that also the risk to reward ratio decreases as you go down with the grading. As you go from the B to the C, it goes from over 1R to 0.96 to 0.27. So there again, it just backs up what you were just saying now about sticking to the high probability setups.
And even if you look at the win percentage, higher win percentage on the higher probability trades, 58% versus on the B setups versus 47% on the C setups versus 16% on the D setups. So right there, that's enough to prove to you really why you don't need to trade those lower probability trades. What did you take away from this, Tom? Anything that we didn't say for this top section?
No, that's exactly it. I think it supports the back testing of the ASFX systems. The A grade are the highest, the B, you see, as you go down the grading, they get less probable.
I love it. So tell us now what we're looking at here towards the bottom.
So this second section just takes it a little bit further and breaks down the strategies that we trade, the A1, the D1, the D2, and then obviously the one that I've added in at the bottom. And then it just, for each one of them strategies, gives the A to D grade. So I can break it down even further to see where I'm either performing well or I'm costing myself money.
And as a coach, when I see shit like this makes it super easy for us to make improvements in your trading, you know, Tom, because what we've found, and James has been a part of this too over the last couple of weeks, if you would just not take these A1 entries, you would have probably passed the first phase of the funding challenge already, correct? Not that you're already still profitable. You're most likely going to pass it within the next week or two, but you would have passed it already if you hadn't taken those A1 entries, right? Something like that.
Yes, correct.
Yeah. And if you had just focused in on these D1 entries that you seem to see really well, look at the profit percentage gain there. Much more what we're looking for. And same thing on the D2 entries, cutting those out seems to be a good idea. Now, still on the D2s, you would have still been profitable, even because of that, if you would have taken the C setups. So that's maybe worth something. Then it's interesting to see the T1, which is your strategy that you're kind of building off the A1, kind of mixed bag results too. So to me, and I don't know what it says to you, but to me, it says you should just be trading B, C, and really A setups on the D1 entry. That's it.
100%. That's it.
I love it. What else do you see here, James? Anything else that's interesting?
Yeah, no, 100%. I remember on our coaching call the other day, I was encouraging Tom to literally just stick to the D1 strategy because he's killing it with the D1, you know, and that's like, as a coach, as you say, it's easy to see, you know, you got to find what works for you. You know, everybody's eyes see something different when they're looking at the charts. As a trader, maybe, you know, I know Dennis trades the A1 really well, but he struggles a bit with the D1. So everybody's different when it comes to trading. And that's just the beauty of it. You know, not everyone's the same, and you can read things and perform differently in each key levels.
And one other comment I would make on this before we leave, I would say the 52% win rate with an 8% gain, 7.5% gain is really, I think, inspiring, hopefully, to a lot of people that can see, look, I can be wrong. And as long as I'm willing to be wrong and cut my losers like you do quickly, then I'm going to be able to grow the account slowly over time. But it's when people get lost in the 1 or 2 days worth of trading results that sometimes digs them into a hole too deep. And I have to compliment you, Tom, as we shut this part down. One other thing I wanted to say on this video was that you did really well. I believe it was last week, taking a loss on Monday and then slowly even pulling yourself away from that terrible day on Monday where you were just not yourself. You slowly fixed it as the week went on and recovered the loss. And that's so commendable and so tough to find in a trader. And it makes me so excited to see how much further you can really take this, not just because of your analytics, because of the grit that you show when you come to the desk. And I wanted to highlight that because I think a lot of people would close the computer, they'd walk away, they'd get frustrated on Monday, and then they would dig it even deeper on Tuesday and Wednesday. They'd come in greedy, they'd come in hungry, they'd want to do something stupid, you know, and you didn't do that. So I have to commend you for that, you know.
Cheers, thank you.
Absolutely. So I appreciate you guys doing this video. I want to keep it short and sweet just to go over the statistics like that. If you guys watching want to see more videos with Tom and you want to learn more about the way that he's going about his analytics, drop a comment down below. That'll let us know to bring Tom back on and do more videos. I think most people like my channel now as we're doing the live streams. They like to see these behind the scenes kind of videos on how traders are actually growing. So we're going to continue to highlight people, I think, from the Black Shirt Club as much as they want to be involved, since those are some of the most serious traders that I'm working with right now. But for everybody else, I'm going to put Tom's blog in the description. Make sure you go check out the blog, subscribe, make sure you're following up on his posts. A lot of valuable nuggets there. He shares his wins, his losses, his good things, his bad things. It's awesome. And I always like supporting that. So you make sure you check that out. He's the Kaizen Trader on Twitter, on Instagram. He's on his way to growing his social media presence, which is always good to see. But I appreciate the time, fellas. This was good. I'm hoping that people get some value, get some insight on really the kind of statistics that they need to be keeping track of if they want to really make improvements. Seeing this data makes you a better trader, Tom. Cool. James, thank you, brother. Tom, appreciate you. Everybody, we'll see you guys
Thanks
next
for having
time.
me.
100%.
Cheers. Thanks, Austin. See you, James.
Cheers, Tom.